So I'm also going to take some questions probably while I'm done going through the how-to of the MindFiBot. So first, when you have your MindFiBot and everything, it might not be as clean as my chart. So if you want to get the settings of how my chart is, you can see I untick many things. If I tick them, and everything is just gonna come back and it will look messy. So if I decide to click everything, you can see all of this, I untick it. So you can untick it so that it will just be showing you buy and sell. You can see I untick all of this, right? So I don't want it on my chart, so my chart won't look messy, but it is mandatory to have it so that the buy and sell will come in as we want it, but it's not just showing on the chart. It doesn't mean it's not working. It's working, but it's not showing on the chart. So you can untick it if you want your chart to look as clean as mine. So just untick all of this that I tick now. So I'm not going to show it so that my chart won't look messy. I'm just going to click cancel. All right. So now the major questions we do have is how do I put my TP? How do I put my stop loss? Which time frame will I use? All of that, all of that. So when you're trading, there's what is known as risk to reward ratio, right? So I'm just going to write that here. It's called RR. So risk to reward, it means risk to reward, right? So what are you risking to what do you want to gain? That is what it means. All right, so let me see if I can put this on the middle. Okay, so what you are risking to what you want to gain. So first, you can decide your entry and exit based on risk to reward ratio, right? Meaning I'm risking 10 to make 20, right? 100 to make 200, or 1000 to make 2000, right? So if you're doing this, it's known as 1 to 2 RR. That means you're working on 1 to 2 risk to reward ratio. You're risking 1 to make 2, right? So that is what it means. So if you're doing 1 to 3, right? If you're doing 1 to 3, it means you're risking 10, for example, to make 30, right? Risking 100 to make 300, risking 1000 to make 3000, right? This is called 1 to 3, 1 to 3 RR, right? So I will also have the 1 to 1. Some people do 1 to 1 as well, which is 10 to make 10, right? 100 to make 100 and 1000 to make 1000, right? This is called 1 to 1 risk to reward ratio, right? So the advisable one is for you if you're a complete beginner, right? If you're a complete beginner, the advisable one is for you to do 1 to 2. 1 to 2 simply means you're profiting on all your risks, right? So if you're doing 1 to 2, right, it means anytime you make times 2 of your stop loss, you should be out of that trade. That is what it means. And 1 to 2 is good for beginners because they don't have much experience in trading, right? So they should learn to be taking profit as well as taking closing their loss. So what it means 1 to 20, if you enter a trade, for example, now let's use this gold trade here. This gold trade here, right? So if you enter a trade here, right, and you want to do 1 to 2, for example, you can see from where the signal came in, which is this level. That means the open of this candle. That is when the sell signal print. So when the signal print, you open your sell position. Immediately you open your sell position, you already know the lot size you open with. So what are you risking on that trade? Are you risking $50? Are you risking $100? Are you risking $10? Are you risking $1,000? Right? Immediately you open, you put your stop loss at that price level, right? So when you put your stop loss immediately at that price level, if you're trading, for example, let's say 0.1, right? So if you're trading 0.1, right, let's say trading 0.1. So 0.1 lot size. If you're risking $10, for example, on 0.1 lot size, that is 10 pips, right? If you're risking $30, right, that is 30 pips. If you're risking $50, that is 50 pips on 0.1, right? So if you open your sell position here, right, and you're risking $10, for example, on 0.1, 10 pips, you can see immediately it moved 10 pips like this, 10 pips low like this, you're out in loss, right? So if you're trading gold, there's no how you'll be risking 10 pips. It's not possible. The minimum you should risk as a gold trader, if you're trading GBP, USD, Euro USD, you can risk 10 pips. But the minimum pips you can risk as a gold trader per position should be at least 30 pips. That is the minimum. 30 pips, highest 50 pips, minimum depending on volatility. But the minimum pips you should risk as your stop loss as a gold trader should be 30 to 50 pips, especially if you're scalping. So if you're risking 50 pips, right, this is how it's going to be, like this, 50 pips. So that is 50 pips. If you're risking 30 pips from entry, this is how it's going to be. That is 30 pips, right? So using this tool, 304, that means 30 pips. 30, you ignore the last number, also ignore the last number. So if you're risking 30 pips, for example, on this trade, you open the trade immediately, it gave that sell. And remember, this is 1 hour we're dealing with. So you open the trade immediately, it gave that sell, and you're risking 30 pips from entry. So if you're doing one-to-one, you should already be out in profit on this level, right? If you're doing one-to-one on this 30 pips, you should take your profits, meaning you open a position, you risk 30 pips, right? So 30 pips on 0.1 lot size is $30. So you're risking $30 to make $30, right? So if you're doing 1-to-2 again, if you open on that position, right, and your take profit will now be 60 pips, which will be around here. So you can see 1-to-2. So if you open there, open your position there, and you're doing 1-to-2, immediately it comes to 60 pips, you're in $60 profit. You should take out. You're done with that trade. You're done with this sell signal, right? This is the first type of approach. This is the first type of approach, right? When you're trading this is the first type of approach. So you can do it based on risk to reward ratio, right? So, but one of the disadvantage of this risk to reward ratio of doing the dollar aspect is because you won't be having stop loss that will be above structures, right? Normally we should have stop loss above structures, meaning if you bought the fusion pack, I assume you've already gone through our beginners and intermediate course. You understand what the structure is. So this is, for example, higher high, higher low, higher high, higher low, right? Higher high, lower low, lower high, lower low, lower high, lower low. So stop loss based on structure simply means for each position you open, you have your stop loss above that structure. So if you are selling, for example, you're selling here, your stop loss should be above this lower high, right? If you're buying here, for example, if you're buying around this price level, your stop loss should be below this structure. That is what structure simply means. So the disadvantage of this first system that I told you should use just risk to reward is that sometimes your stop loss might not reach above that structure, and that trade might still be valid. It might just pull back beyond what you're risking, right? And you have to guard because you're doing it based on risk to reward. So how can you approach incorporating this structure into how can you incorporate this structure into the stop loss, right? So for example, yeah, we know that risk to reward ratio risk to reward ratio can be done. So if you want to use structure here, you have to put your stop loss above this cell, right? You have to put your stop loss above this cell because that is the last lower high, right? So that is the structure. So if you open a position here after this cell printed, after this candlestick, you open your position here and you want to reach $50. So you need to calculate, okay, from this entry to above that structure, how many pips is equivalent to $50? All right, how many pips is equivalent to $50? You can see from that entry to above that cell is 135 pips. So it means 135 pips divide by $50 will give you what lot size, right? It will give you the lot size that you're supposed to use. So let me just type this here. So it means 135 pips, right? Divide by $50. If you're risking $50, it will give you the amount of lot size you should use, right? So it's going to be 135 divided by 50. So that will be approximately 0.2 lot size. So 0.2 lot size is what will give you this $50 in this 135 because 0.2 lot size is percent. So if you calculate 0.2, which is 20 cents times 135, it will give you, okay, it will give you around $27. It will give you around $27. So each 100 pips of $50 is 0.5. So it means you need a range between 0.5 lot size to 0.2 lot size, right? So you won't be using your whole 0.1 lot size. In such way, this is another way you can approach it. But again, if you open 0.5 and it comes here, right? Because you can see this one came here and it still went back up. So if you open 0.5 and you have that huge stop loss and price just dropped 67 pips. So 67 pips simply means you've made just around $40 or so, not up to $50. So when you're in profit in gold above 50 pips, what are you supposed to do? If you're in profit in gold above 50 pips, right, and you want to protect your account, what are you supposed to do? You're supposed to move your stop loss back to entry, right? So if you're in profit above 50 pips and you entered here, your stop loss was ideally up there. All you have to do is to come and move your stop loss back to entry, right? So you move your stop loss back to entry. Okay. Are you guys following? Please, if you can hear me loud and clear, type 77 on the chat box. Okay, so that is another approach, right? That is another approach. Now, I'm just talking about the entry and exit aspect right now, especially the stop loss aspect. So another way, let's look at this buy. You can see this buy here that happened around this price level, right? So that means you open your buy around this level and price did not even keep going up. It came down before it eventually moved up, right? It did not give another sell, so the buy was still valid. So if you are doing risk to reward, and for example, you open here, right? And what you're risking is $50, for example, right? And you're trading 0.1. You can see at this level, you're already on in loss minus $50. So what can you do? just take your loss, right? Because you're doing risk to reward. But if you're doing structure, your stop loss would have been below this buy. So you can see your stop loss will be huge, which is 157 pips. So on 0.05, you have a stop loss of almost $150, right? So if you enter immediately there and price, draw back a little bit before flying, you would have still made money if you had used the second method of putting stop loss, meaning putting your stop loss under structure. That is the safest, but you need to adjust your lot size. Do not decide to just open anyhow lot size, because you don't know how much is going to draw down, right? How much is going to draw down. Now, there are other techniques that you can use. If where the structure is far, right? Is far from your entry, but not all the time it will retrace. Sometimes it might just keep going. And if you keep going, you probably miss that opportunity, right? So what you can do is to do what is known as position sizing, right? For example, now this buy printed after this candle. So you open, if you normally your lot size is going to be 0.1, so you can just open 0.2 first to see if it keeps going, at least you make something, right? If it pulls back into another zone, then you can now add your main position. And you can now add your main position, right? So what you can do is after the buy has been printed, so you can get this Fibonacci tool from the buy to where that candle is, right? And take your entry on the discount level. So if you have your buy here, right? So you won't be entering your full position on that buy, right? You can open, if you're trading 0.1 lot, you can open 0.2 first. If it keeps going, you make money from that 0.2. That's fine. It's not a trade that you need to just put all your risks at a point, right? So you open your Fibonacci, you draw from that buy to that candle where it closed. And when it starts dropping into the discount level, which is below 50%, right? The discount level is below 50%. So when price start dropping below 50% here, you can now add position. Or 50%, you can add another 0.2. For example, on 61.8, you can add another 0.2. On 70, you can add another 0.2, right? So you can see from those discount level, which is 50%, down to here, your stop loss have reduced from 157 to 77 pips, right? This is just you trying to keep into structure, mechanical way of putting stop loss, because that is the best way, right? So you put your stop loss below the buy here, right? But you don't put your full entry on this candlestick. In case price pull back, you add more of your position on the discount level, which is 50%, 61, and 70, right? All this level you can add position. So you can see if this approach was used on this buy, first 0.2 drawdown, right? Under 50, you add more 0.2. On 61, another 0.2, that's making 0.04, right? On 70, you add another 0.2, or you just max out your lot size on 70, meaning put the remaining that will make it 0.1, if 0.1 is what you normally trade, right? So from there, you patiently wait for price to start moving, and this trade moved all the way to 332 pips. So you can see the risk to reward ratio, even from the first entry, is magnificent. So this is how you approach your stop loss. Now, taking profit can always be based on risk to reward ratio, just as I explained. If you're looking to take times 3 of what you risk, fine. You times 2 of what you risk, fine. If you want to take times 5 of what you risk, that is completely up to you. But I can advise you to just be doing times 3 maximum. If you are a newbie, do times two, right? I mean, this market will be here for million years to come. It's just developing. This market has been there before any of us, before even our ancestors. It has been there. People have been trading currencies. It's just that the digital space now is making it easy, and it keeps growing in the future to even be more sophisticated than this. Who knows, in the future you can be even be taking trades from your mind without even pressing buttons, right? So just don't rush any process, and follow it how it's supposed to be. So that is how you approach the lot size aspect, the stop loss aspect, above the sell or through the risk to reward. Any of that is completely fine. So I'm going to check. Someone is saying, what is the best time frame would you recommend when using this code? There's no best time frame. I mean, you can trade it on any time frame you want. Just know that if you're trading on 1 hour, on the day you might not have maybe more than one signal. Like this is 1 hour, right? This is 1 hour. You can see each day mostly is just one signal. Like this is Wednesday, you just gave a sell on 1 hour Wednesday. This is Thursday, you just gave a buy on 1 hour Thursday. This is Tuesday, you gave a sell and you gave a buy, right? But mostly you just give one signal on 1 hour, like per day. And if you're going to check 4 hours, 4 hours, it mostly just give one signal per week on 4 hours. Like this is 4 hours. You can see this was since last week Friday, right? Last week Friday through last upper week Friday NFP. Throughout last week, no signal was on 4 hours, right? Even this was last 2 weeks. This cell, we caught this cell with the whole thing, right? You can see it only gave one cell for over a week, right? This is, if I calculate, this is Monday, Tuesday, Wednesday, Thursday. This is Tuesday, right? This is Thursday. This Thursday as well. This is Monday. So for almost 2 weeks, it also gave this sell only. So depending on the time frame you want to trade, any time frame you want to trade is completely fine. Just know that how to put your stop loss is the same on how I explain. And the higher the time frame you go to put your stop loss, the more wider your stop loss will be. Right? Imagine this buy here, opening here, and you put your stop loss down here, almost 500 pips. Right? So that is too much. So what you can do is use higher time frame for direction. If 4 hours is bullish, then lower time frame should be bullish. Like the bullish movement on lower time frame should be more high probability. So if 4 hours is bullish here and you come to 15 minutes, at least if you're trading 15 minutes in a day, you should see some multiple trades, right? Don't worry, don't mind last week. Last week has been full of ranging. Let's go to other weeks that did not range, like this week. So if we put 15 minutes here, you can see this is Wednesday, right? On Wednesday, okay, let me take us back to the week that did not range on 4 hours. Okay, I'll go to 15 minutes. So this is 15 minutes, right? On 15 minutes, you can see this sell 130 and this by 9 a.m., right? So, but what is happening on 4 hours? That week, 4 hours overall, we have a sell. So it means if I'm looking for sell on 15 minutes and 5 minutes, I have more chances to make money than look for a buy. That is what it means. Know the overall trend. So if 4 hours is showing sell for that week and I come onto 15 minutes, what should I do? I should ignore the buys, right? So this was the buy, London session 9:30. So it looks like a trap because higher time frame is not a sell. So I ignore this buy and I take this sell. So you can see the sell played out, right? Right? Even the next day, this buy, you ignore this buy, you take this sell. And I think that sell also played out, right? You can see the sell played out. This is another new day. Each box here is showing another new day. So a sell here and this sell played out, right? So also here you can see another day, 4 hours was sell. This buy, you ignore it. The sell comes, you take the sell, you make money from that sell. Same, it just keep repeating itself, sell, right? So and now that 4 hours is buy, it means when we come to lower time frame and we look for buy, the buy will have more probability than the sell, right? So and I think that is what even happened last week because price has been ranging, but I think from before Friday, price moved a little bit, right? This is Thursday, this is Tuesday, this is Monday. So remember Friday, buy was there on NFP. So if you this sell, if you ignore this sell and took this buy, you made this money, right? If you ignore this sell, took this buy, you made this. That was last week, talking about last week. This is 15 minutes, by the way, right? So if you ignore this sell and took this buy, right, you made this money. If you ignore this sell and took this buy from here, you made that money. So even last week it happened. It's just that Thursday and Friday market became very it has been ranging. I don't know why. Probably no liquidity or because of gold tariffs that Trump put or something fundamental. But you can see the buy played out. If you ignore that sell, took that buy, you made that money. So last week, this is last week movement. How many opportunities following the trend? One, two, three, four. Four opportunities that you would have made money following the trend last week. If you had sell, also you would have made money, but let's put the discipline to be following the trend because this sell might play it out now, but another time that you decide to counter trend, the sell might not play out, you take loss. Just like what happened here, you can see this sell was short term and this buy continue. So, but let's calculate the pips: 295, 255, 500 and something, 261, 292. So even following the trend in the choppy market last week, we would have made over 1,000 pips. That is what this means on gold only, right? So that is how you should approach it. And if you want to be getting smaller stop losses, that is when you go to 1 minute. Now this is 15 minutes, right? So you'll come to 1 minute. If you know that 4 hours is bullish or is bearish, that means on 1 minute you should ignore what is not in line with 4 hours. So if 4 hours is bullish, that means on 1 minute I should ignore any sell and be taking the buy. Remember last week was bullish, right? On gold. So before Friday, let's take with this is Friday as well. So on Friday, if you had been scalping on 1 minute, right, you would have caught this buy, ignore that sell, caught this buy, ignore this sell, caught this buy. 4 hour was bullish, right? You can see how it played out. So this is how we approach the market. I mean, the market, you just have to put some reasonable thinking into it that, okay, if this is this way, let me be doing it this way, right? So last week was bullish. Just look at how the buys played out very well. You can see buy, all this buy played out well. This buy played out well. This buy played out well. This buy also played out well. So this is how you can approach. This is how you can approach the time frame issues. I hope that answer your question, Viv. I think that's Victor or something. Okay, so do you guys have any other question? Any other question? If you have any question, you can raise up your hand, unmute you, or you can just type it. Okay, yeah, Mustafa, you can talk.
Yeah, good afternoon.
Yeah, good afternoon.
Good afternoon. Yeah. So, based on the investors login sent on the Telegram channel, I was trying to log in to see how you are scaling the lot size, but I couldn't have access to the login. I don't know, maybe probably there's an error considering the
Where did
password
you try
or
to?
maybe the number. On MT5.
I'm like, when did you try to log in? Is it on the day I posted or
Did
after?
Yes, the day you posted. The day you posted. Last week you posted, I tried to. Same thing this week also. I wasn't able to gain access to the login information. I
Probably
don't
is
know.
probably is your font or something. Yeah, but you can revert
Uh,
back to the video we did yesterday. I think,
okay.
yeah, the video we did yesterday, we did the analysis on the account with everybody. This is the account here. The account is sitting at
Okay.
500. This is the history. But the video we did an event yesterday on YouTube Live and also a Zoom meeting presenting the business. So, but this is the
Okay.
account. You can just take a screenshot. I think there is the lot size
Okay.
showing.
Yeah, I just want to get myself familiar with the lot size scaling. That's why I needed to. Okay, I've screenshotted it. Ah,
Okay, I'm back. Sorry, I had a power issue.
all right.
Yeah, so you can take a screenshot of it.
Yeah, I've screenshotted it. Yeah, yeah. Thank you
Uh,
very much.
you have to put it based on time so that you understand based on the deposits. Can you see my screen?
Yes. Yeah, I can see because I was
Yeah,
trying
this is
to
deposit
deposit
on.
like $100 to
Yeah.
see how far it could go. So that was the reason
Okay, yeah, this is
why
how I
I had
spend
to.
my size. So the main trade that
Okay.
started at 28th of this 560 was withdrawn just to activate the account. So yeah,
Okay.
that's the trade and those the lot size. You can see I started with 0.2 like that, like that.
Yes, yes. That was exactly what I wanted to see.
Point. And the highest I've
Yes, yes.
traded on the account is 0.3. And the reason I use
0.3.
this account is of the unlimited Xness have is only there I can do the flipping because it's just a flip
Yes,
account. It's
yes.
not an account
Yeah,
having any serious commitment just to see how far it can go, scalping the MindFiBot using this account.
yeah. Actually, since
Yeah,
last
so you
week,
can
I
screenshot
was
the
I was on a Pro Firm
lot.
account. So I've been using the bot for like a confluence for me to have confidence in executing the trade. And it has been going very well. It has been going well.
It's
It has been
even me
going
that
well.
created this book. I always sit down and be like, wow, so it really worked.
It has been going well.
It's
Yeah, it has been going
not
well.
easy to have. It's not easy to
Because
have.
last week he printed he gave a signal on good buy. So immediately give that signal. So I had to wait for price to retest that point he gave that buy before I now enter the market. And it moved smoothly without no drawdown, zero drawdown,
Yeah,
zero
I can tell
drawdown,
you if you're trading 1 minute, like
zero
most of the
drawdown.
time, you'll be having a lot of zero drawdown on one
Yes,
minute.
yes. So it was even on it was on 5 minutes that day. 5 minutes, yes.
Five
It was on
minutes.
five
Wow.
minutes. Because yes, looking at the structure, it broke out a resistance level. So and immediately broke out, it printed a buy. So I was waiting for a retest and it retested, then I entered the market and it went smoothly to my TP. Yeah. So
Now that would be a nice feeling. Smooth TP.
as in no drawdown at
Yeah,
all. As in on good, no drawdown. Yeah. It's a very smooth feeling. So yeah, it's
I
very
can
good.
relate. I can relate.
So
Yeah.
which one do you want?
Thank you very
Viv,
much,
you
sir.
can speak. Yeah, you're welcome, Mustafa. Viv, you can speak.
Okay, sir. Can you hear me? Good afternoon, sir.
Yeah, good afternoon.
Okay, so the question I wanted to even ask is what this guy Mustafa just said now. Um I used the bot throughout last week, and honestly, the only time I even had a loss was because I I didn't see it when it's printed. I think I was distracted, and I came and I saw that it has printed, and I just said, "Let me just take it." Then the thing went in a loss. But so far, so good. In let me say, in 10 trades, I won 8 out of 10 trades, which is really really good. Like the way the bot is working, I'm even asking myself, like, is this thing real? It's working so well. Like it has made my trading so easy. Like that bot made me 250 pounds on Thursday, made me 600 pounds on Friday. I'm so happy, and I just want to tell you that you're amazing. Like your mind, your brains to create this kind of technology. I'm so grateful and I'm so thankful. It's been amazing. So the question that I have is that when a signal prints, for example a buy, do we take it immediately we're seeing that signal, or we should wait? Because sometimes if you don't take it, it will just continue going like that in the buy. It's not every time it's retest. Sometimes it will retest and I will take a second position. Like I'll wait for it to retest, I'll take a second position. But what do you advise? Do you advise that immediately we see the signal printing, we take it, or we should wait for it to like dip down a bit? Because most of the time it will like come down before flying back up if it's a buy. So what do
Yeah.
you suggest?
Yeah, I explained a bit of that approach. So what you do is immediately you print that buy. If you're normally going to trade, for example, 0.1 lot, so don't go all in with all your
All
lot size.
in. Okay,
So
okay.
you can enter with maybe 0.02. If it comes
Okay.
down below our discount level,
Yeah.
that is if you're buying, that is below 50%
Oh,
Fibonacci retracement, then you can now start stacking all your lot size till you
okay.
get to the main lot size you want to use. So that to
Okay.
just give you some safety net and
Uh,
less stop loss like that.
okay, okay. Thank you very much, sir.
That's how you can
Sir,
approach it.
another thing I want to suggest, I don't know, maybe when you do a 2.0, because I know definitely there will be an upgrade later in future. If there's a way we can get like an alarm or a vibration when there's a signal, because it's not easy to sit
Yes,
down on this
you can
chat.
get
Oh.
that.
We'll
Thank
sit
you
down, be
for
waiting for
reminding me.
signal. The moment I just remove my face, like the signal will come. Like the thing is really painful.
Yeah,
I've been
I
let me
sitting
show
down for
imagine
like
you.
almost
it's actually
20
working like
minutes.
your magic.
Almost
Let
You
20
me
close
show
your
minutes.
you
I've
eyes
been
how
like
we
this.
waiting.
can.
The moment I just get a little bit distracted, markets don't go. Don't leave me, signal
Yeah,
don't come. Like, so I don't know if there's a way we can get like an alarm or a vibration when there's a signal alert,
yeah,
something like that.
you can get that. You can get that.
So,
I'm supposed to teach it on this meeting, and it skipped my mind, so you just reminded me.
okay,
So
okay, thank you.
yeah, how to get the alert? If you're using TradingView free plan, you might not put more than one alert, right? But if you have the paid plan for TradingView, you can put some 20 alerts, some 100 alerts. So what you do, you click on the signal. For example, if this is sell, you just right click on it, right? Then you put add alerts. The issue is that I don't think it works on phone. It probably works on phone, that's the app, but you have to
Mm,
find a way to put it there. But on the laptop, it works like that. So you put add alert on MindFiBot. So when
okay.
you do that, it comes to this condition: go long or go short. Go long, buy; go short, sell. So if it's
Wow.
go long, if it's go short, you put the time frame. You can see this is 1 hour. So you can put it for 1 minute, for seconds, for 10 minutes, for 30 minutes. So when you do that, if like this now on gold, I go short for 30 minutes. So when I create it, immediately we have a sell signal on 30 minutes. It will notify me immediately.
Wow.
Just like
Okay.
how you put on your horizontal line and all of that, to just be beeping you, go short, go short.
Okay. Okay.
Yeah.
Thank you so
So
much.
it's working like that. Yeah. That's how you do it. So yeah, any further question? Mustafa, you want to ask? Your hand is still up.
No, sir, I don't have any question again. You've attended to my question. Thank you.
Okay, all right.
Yeah.
So, Viv, your questions complete. You don't have any question? because your hand is still up. Okay, so have everybody understood how to use this bot? Is anyone lost in anywhere? Okay, Michael, you can raise up your hand. You can unmute yourself. Michael, you can unmute yourself. I can't hear you. Michael, can you tap? I can't hear you. Please, if you can hear me, just let me know on the chat box. Okay, so Michael, maybe you did not connect your mic very well. So we can't hear you. You are unmuted as well. Femi,
Hello. Yeah, hello. Hi guys.
yeah, we
So
can
so
hear
I
you.
just made it back from church, so I missed most of the information, but I'm gonna watch the video. One thing I wanted to check with you though, do you need to understand structure before you actually know um I'm sorry, I know you've probably covered this. Do you need to look at like 4 hour direction before you know that you want to go on 1 minute or 5 minutes for the bot to print?
Yeah, it will help you have more high probability trades, because if 4 hours is bullish, meaning the buy on 4 hours, it means on 1 minute, if you take a buy, you have more chances to make more profit than taking a sell. So you can just ignore the sells and capitalize on the trend and take the
Yeah,
buy.
nice. Okay,
Yeah,
cool. Makes sense.
yeah,
Yeah.
I
All right.
expect that. Yeah.
Thank you. I watched the video. Sorry, I'm chewing something. I watched the video once you drop it so I can catch up on what you guys have said.
Okay, no problem.
So one last question. Are you gonna possibly have another session like in future?
Yeah, definitely we'll do
Oh,
have.
thanks. Okay, cool. Thank you. Thank you.
Yeah, you're welcome.
That's all.
Okay, so no further question. I'll assume everybody has understood all that we have taught here.
Hello, can you hear me?
Yeah, Michael, we can hear you now.
Okay, so my question is, I just bought the bot newly, so I'm still new to it. So from your explanation, I understand some certain things today. But what I want to ask is, like, if I'm waiting, like I understand structure and how structure works. So now I'm expecting a sell. Then, but on 1 hour time frame, I've not the bot has not printed sell signal, but on maybe on 5 minutes or 30 minutes, it has printed sell. So, but I want to take the trade on 1 hour. Should I still wait is print, or I can follow my structure and just take it on the 30 minutes?
You can take it. For me, all my entries, I take them on 1 minute.
Uh, okay,
You
okay.
understand? So as long as we know the overall trend
Yeah, the movement,
is
yeah.
is buy. So if I come
Yeah.
to 1 minute and I'm on my buy level, I just wait for 1 minute to print and I take the buy. Sometimes I even take the buy on 15 seconds, sometimes even 1 second.
Wow.
But yeah, because I
Okay.
have paid trading view, my time frame
Okay.
can take me all the way to 1 second.
Okay. Okay. Okay.
Yeah.
That's good. All right. Thank you. Thank you.
Yeah, you're welcome. So and we'll be having also YouTube lives on Tuesday. I've posted the link, or you can just subscribe to my YouTube channel, You Share Mindset. So those YouTube lives will also take trades lives, and so you can see the whole process on how I approach it and how we execute as well. Okay, so I'm going to get the recording. These recordings will be uploaded on the YouTube as well, and then I will email everybody the link and also post it in the Telegram group so that you can watch it again. So let's call it a day since I don't have any question to answer anymore. And yeah, I wish you guys a profitable week. Talk to you guys soon. Bye.
All right, you too.